and what happened? They couldn't find any oil, any crude oil, any gasoline over there. All the money wasted. Can you recover that? No way. But what if you found out the oil well? The benefit is going to be 1,000 times more. So that's why the exploration companies, they are given huge millions of dollars to explore natural gas, crude oil, and other stuff, right? So now answer this question. Suppose you are trying to decide whether to drive or take the train to Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the cost of train ticket relevant in this decision? In other words, should the cost of train ticket affect the decision of whether you drive or take the train to Portland? Answer this question.
A.
Junpyo,
B.
why B?
Because it's sunk cost. I mean,
Which one is sunk cost? Did you already incurred? Did you already purchase the train ticket? You are deciding between these two alternatives, whether to purchase a ticket or go by your own car. This is not the case of sunk cost. This is the case of differential,
opportunity cost.
relevant or irrelevant cost. Because your decision point is, I don't want to waste money needlessly. So answer is A. Whichever the cheaper option, I would go. Right? Other option I would drop. Right? Good. Now answer this question. Suppose you are trying to decide whether to drive or take the train to Portland to attend a concert. You have ample cash to either, but you don't want to waste the money needlessly. Is annual cost of licensing your car is relevant in this decision or not? Is it a differential cost or relevant cost or not? Yes, Subhan.
This is like sunk cost. You should already like pay it. It's like for a year. Doesn't matter you're going to Portland or not.
So which one is?
B.
B or A? Subhan, I couldn't hear you.
A or A.
You said A.
I'm confused. Isn't it sunk cost?
You tell me.
It is.
Yes, it is a sunk cost. Because
Then the
whether
answer
you
should-
take a train or whether you go by your car, you already paid, licensing fees. It has nothing to do with Portland. Whether even you move around the city or somewhere else, whether if you even leave the country, you already paid the licensing cost. It is a sunk cost, but it is relevant in your decision making or not?
Not.
Well done. Answer would be B, not A. Right? So think when you are deciding, so think in terms of cost that helps you to decide on the basis of either opportunity cost, either differential or relevant or irrelevant cost, or either sunk cost. So all these costs are based on decision making, right? Good. Now, suppose that your car could be sold now for 5,000. Is this a sunk cost Coco.
No, it's not.
Why?
Now what you have to take into consideration is the like differential cost. Like when you're gonna sell it compared to how much you bought it, there's
Exactly.
this
This
difference.
differential cost. When you sell it, then you have it. But you didn't sell it, you don't have it. But is it a sunk cost you already sold? No. Right? So it's not a sunk cost. Well done. So we have a learning video here. It's not more than 10 minutes. It explains all the cost structures and all the stuff in a nutshell. So please watch this video and then we talk about our assignment. Here we go.
Can you hear something?
No, I mistakenly mute my,
Oh.
I think I need to replay it again. Here we go, please listen.
Further divided into differential cost, opportunity cost, and sunk cost. A difference in cost between any two alternatives is a differential cost. These costs can be fixed or variable. For example, the decision to make or buy a part requires distinguishing between costs that differ between the two alternatives. In some cases, differences in revenue will also be examined. For example, deciding whether to accept a special customer order, which may not cover certain fixed costs.
We have to, as managers, think through each decision independently and identify which costs are relevant and which costs are not relevant for that decision. Now, if we design accounting systems correctly, we can get categories that are going to be more useful for that purpose, but it's still not going to be automatic. Managers are still going to have to think very carefully about what costs are relevant, which costs are not relevant before making a decision.
Part of decision-making involves consideration of the opportunity cost. The opportunity cost is the potential benefit that's given up when one alternative is selected over another. For example, the contribution margin lost from cutting back production of one product to make room for the production of another. Finally, there are sunk costs. A sunk cost is a cost that has already been incurred and that can't be changed by any decision made now or in the future. For Clorox, the sunk cost of a specialized piece of equipment used to produce a new product would not be a factor if it becomes necessary to choose whether or not to continue manufacturing the product.
So that's kind of a cost of doing business in their introduction of a new product. If the product turns out not to be successful, we've clearly defined what our sunk cost is, and we understand how that's impacted the organization.
However costs are classified, they are useful in understanding cost patterns, analyzing performance, and planning future operations. Ultimately, the decisions that a company must make dictates the method it uses for determining costs. A management accountant, like a good tailor, designs the cost accounting process that is best suited to the decisions made in his or her organization. Whatever the business, cost classification is based on how costs will be used, preparing external reports, planning budgets, and making decisions. When valuing inventories and determining expenses for the balance sheet and income statement, costs are classified as either product costs or period costs. Period costs are costs such as rent and administrative expenses, which are tied to a reporting period rather than a specific product. Product costs are raw materials, labor, and manufacturing overhead that can be traced to a product. To help management track and assess expenditures for planning and decision-making, costs are sorted into additional classifications. For predicting cost behavior, such as the impact of increasing output at a manufacturing plant, expenses are classified as variable or fixed. To assign costs to objects for pricing, profitability studies, and control of spending, costs are classified as direct or indirect. And finally, to help management compare alternatives, costs are further classified as differential, opportunity, and sunk. In the end, calculating costs isn't a cut and dried process. Managerial accountants must tailor internal and external reports to reflect each company's unique cost issues.
Okay, I hope you really like this video. It summarizes what costs are used for what purposes. Okay, we have assignment 1. I would be uploading it on both platforms, and all the instructions are the same. It must not be typed using computer software. It must be handwritten. You're allowed to use ePen if you have if you have the iPad or Surface Book or touch screen something, you can write it down through ePen, or you can print it out, or you can use on your paper, write it down the name, student ID. And remember, you need to take the picture and paste it into a Word file and rename it accordingly, right? So this, I think this is at least at least second semester with me. So now you know that how you are going to rename the file and how you are going to send me. All the requirements are the same. It should be in Word file and handwritten. Any question?
No, sir.
Han, Junpyo?
No questions, sir.
Okay. So I would be uploading the assignment. And if you have any question, please do post on our WeChat group. I would be happy to answer over there. Okay. So see you next class. Until then, take care. Stay safe.
Thanks, sir. See you.
You, sir.
Thank you, sir.